Good morning, good afternoon, good evening, wherever you are. Welcome to our Impact webinar. This Impact webinar we have been conducting for last few months, and today we are discussing a very topical issue of neobanks or challenger banks. It has different names in different places, but the most important aspect is they are newer than the traditional banks. But how is it? Are they performing well, or do they have any operational difficulties? Whether the future lies on them, or what sort of regulatory challenges they face, and what is the impact of fintech companies in the functioning of these banks? And that's a broad topic we are going to discuss in the context of Indian experience and the United Kingdom experience. We have selected these two countries on two grounds. One is, as you all know, our ESRC ICSSR project is totally based on the experience of India and UK. But one advantage is UK happened to be the leader of neobank in many sense, and India happens to be an emerging partner in the neobank world. So let us review how this disruptive banking model works in these two countries. And I'm Tankabarut. I'm the principal investigator of ESRC ICSSR project on fintech and fintech enabled services in the UK and in India. And Varnika Goel, she is the research director of Timbit. Timbit is our impact partner for this project. Let's move
Thank
on
you,
with
Tanka.
this. Thank you, Varnika. Let's move on with the presentation, Neobank World, and overview of the disruptive banking model in India and UK. Shall we move on to the next slide? So the first issue is, do they have a common or shared history across the countries? In fact, neobanks have a shared history or some kind of a similarity in terms of its growth in all the countries. For instance, in the UK, the technology paved way to the internet banks in 1990. That was the start of using technology in the modern sense. And in 1989, Midland banks, they introduced First Direct, and later on, 1989, cooperative banks, 1999, sorry, they introduced Smile, and 2003, ING, they have introduced ING Direct, and then many retailers actually started their operations in this area. But they are not new banks or challenger banks. They were not disrupting the banking activity. What they have done, or enhancing the banking activity in that sense, what they have done is use the technology to facilitate or speed up the banking operations. But the challenger banks or the neobanks started in the second decade of the current century is significantly, diabolically different in terms of their operations. They are 100% digital, and they are able to capitalize on fresh technology available in the market. So the kind of agility displayed by these banks in terms of assimilating and absorbing technology is very unique. They actually attract customers through a combination of price competition measures, various app-based services available in iPhone and Android markets. But I always wonder, they are also doing the banking sector activity. But do they have an upper hand in banking sector activity compared to the traditional banks? And here comes the role of technology. And we notice that most of these neobanks, they build their own platforms. They ran their platforms on cloud infrastructure, and they reduced upfront capital expenditure. and their market actually, or their competitiveness that relies on that bit. Shall we move on to the next one? Yes. Let us discuss more about the case of UK first, and then Varnika will lead the Indian story. As I said earlier, the UK, the front runner of neobanks, there are quite a lot of neobanks are there, and they have operations in different parts of the world. Almost 28 neobanks are functioning in the UK. And out of these 28, 6 of them are in Ireland, Germany, Netherlands, Hong Kong, France, and Finland. But they have significant presence in the UK. And 3 of our neobanks are in the top list of 50 neobanks in the US. The banks like Wise, Monzo, Revolut, they are all actually in the top 50 neobanks in the US. And not only that, many of these banks, nearly 6 of them, they are in the top 20 neobanks in the Europe. Atom Bank, Wise, Monzo, Oak North, Revolut, Starling Bank, the darling of British customers, that is Starling Bank, Curve, Mones, they are all in the top 20 neobanks in the Europe. Let us look up this landscape a bit more closely. So as you can see here, in the first column, we have given the names of the top 9 banks, 9 neobanks in the country. And then you can see in the bracket their users, the number of users they have. And their operational details are on the second column. As you see here, all of them have personal accounts, and many of them have business accounts. Couple of them have very differentiated accounts like teenagers and like categories based on demography. But all of them have opened up mobile bank account for UK residents. And some of them have extended it to Europe and also to North America. But one of them, that is Wise actually started their operations in countries like India. And that is something very important. So that means if you are in India, you can open Wise accounts, and there is a small Wise account there. You can use it for 50,000 rupees without any documents at all. So that is the internationalization aspect, particularly relevant to the Indian case. And let me discuss a bit more details of some of these banks which need special mention. Let me start with the Starling Bank. Starling Bank, it has been crowned as the best British bank or the best current account provider consecutively for the last few years. They provide interest on current accounts. They have the overdraft facilities, and they have different types of loan facilities. But completely, all these banks are completely regulated and authorized by FCA and FSCS up to £85,000. And the other bank is Monzo. Monzo, it was a prepaid MasterCard offering but achieving banking license in April 2017. But according to LinkedIn, Monzo is the most sought after startup in the UK. And YouGov actually named the bank as the most recommended brand in 2019. And they got an excellent rating, the Monzo one. And the other bank is Atom Bank. Atom Bank was the first digital-only bank to get a banking license with a mobile application there. And bank is leading the way we use the face and the kind of facial and voice identity in terms of accessing that document. And if you look at the bottom of just the penultimate one, Moniz, and it's founded in 2015 by an Estonian entrepreneurs, and it is well known for its ability to allow users to sign up to the account without proof of address. So that is something very different. Let me explain one more. That is Revolut, because they are starting their operations in India recently. And that is the first British digital banks which achieved something like a unicorn status. And that means their valuation is more than 1 billion US dollars, and again founded in 2015. So if you look at this one, during the last 5 to 6 years, many of them have actually grown big. But have they grown to that level to become a disruptor to the banking sector in terms of its performance? Or this is a new phenomena? Do they survive in the period of pandemic? Or do they work on limited scale of regulatory overlook? Or do they cross over the stress test by the central bank at different points of times? These are some of the issues which we need to look into. Next slide, please. Yeah. So I will come to these points after Varnika's presentation on India. But just before that, let me give the customer experience of these neobanks. The general argument, or the more popular argument, is that neobanks are very good and customers are highly satisfied with their performance and nothing to worry about it. You need to understand one thing. Neobanks or the banking industry is the most trust-based services. So when we think about whether the neobanks have the capacity to alter the degree or the duration of trust the community held with the traditional banking institution, the customer experience is a very powerful indicator. But here, if you look into one of the top banks, which has highest rate of customer satisfaction, is a neobank, Monzo. But just below that, that's a traditional bank, Nationwide. Metro Bank, that's a new bank, but it's again branch-based bank, started in 2010. Then NatWest, a traditional bank. Santander, a traditional bank. First Direct, a internet bank. Then if you go down, you see the Revolut is there, the third from the bottom, and that is with the 69%. So altogether, you see that we can't reach a conclusive impression about the customer experience, the relationship of the customer experience and the performance of the banks. Because we are educating the neobanks in the popular column saying that they can reduce cost and it's a great challenger to the traditional banking system. It addresses the customer concerns. But in terms of customer experience standards, this is not very well reflected. So let me stop my thoughts on the neobanks in the UK here, and Varnika will take on the neobanks experience in India from now onwards. Thank you.
Thank you, Duncan. So I would like to start by saying that UK set the standards of how to build a neobank and what to talk about when we say as challenger banks. So if we go back in time, how we've been always influenced by what happens in the UK and the US and what we call it as West. And we take those learnings and we start inculcating them in our practices. So we're more from an India standpoint, we're more observers and listeners of what's happening outside and then imbibe the best practices out of them and implement in an Indian context. However, what I've seen now in the past 5 years, especially after demonetization happened, there was a huge payment disruption, and leading to that payment disruption because there was a lot of data, customer data being flown in into the digital environment. A lot of companies which were technology platforms per se became financial technology platforms because they started to learn about their customers from a variety of formats, especially coming from the day-to-day transactional environment that was being built after the demonetization. That we were using wallets, we had started being more cognizant of how we are transacting on an e-commerce platform. And then another accelerated push came when we have COVID, and that actually led to people banking as well online. Therefore, overnight, the branch networks drastically had a shortfall, and digital capabilities were to be enhanced tremendously. And that's where we now see India becoming this big hub of neobanks, where we have started to see that neobanks are popping up in every nook and corner with a very specific use case and a problem to solve. And how it all started, definitely, India is different from the UK environment, because in UK you get a license to operate a challenger bank or a digital bank, or a neobank. In India, you do not get a specific license to operate. You need to still partner with a traditional bank to become a licensed partner to perform CASA activities, which is taking savings accounts and deposits and releasing a debit card or a prepaid virtual card. And in addition to that, India also came up with something called a payment bank regulations, wherein payment banks could offer deposit facilities again to retail customers, but do not extend lending services. These payment banks are still not allowed to actually lend services on their payments bank license. They can partner again with a traditional bank and then create lending solutions for their customers, but cannot directly create their own lending products. And then the third thing came in was the on tap licensing framework, which actually enabled companies which were more from a non banking financial institution, NBFCs, who were actually operating digitally for the past 5 years and were having a minimum paid up capital of 200 crores in INR, could convert into small finance banks, which became the Equitas Finance Bank, and we have the Ujjivan Small Finance Bank. So a combination of all of these, today in India, we have digital platforms that have been partnered with the likes of ICICI, IndusInd, Yes Bank, SBM Bank, who are operating on their licenses and becoming the front face for the customers to solve a specific use case. The second is that we have payment banks, which we have Paytm Payments Bank, Fino Payments Bank, India Post Payments Bank, who are operating on a payments bank license to give out retail deposit services without the capability of producing their own lending products. And we have small finance banks, which are operating under the on tap licensing framework. And very interestingly, this month itself, couple of days back, Niti Aayog has released a discussion paper which is actually talking about setting a formalized digital license framework in the India context, which actually allows the RBI to give out digital banking license both in the retail sector as well as the SME sector, which will enable neobanks to become a fully fledged digital bank, the likes of what operates in the UK, US, and even in the Southeast Asian countries. So, if you move on to the next slide, we have a couple of neobanks that I just spoke about. We also consider Kotak and SBI Yono Digibank as neobanks, but because they are digital spin offs of their traditional brand and operate completely digitally rather than giving a traditional face to it. They also are now being called as phygital banking experiences, which have the capability of giving you a physical network that exists from their parent organization, but also a completely online digital persona, which is driven by their complementary brand like Yono and Digibank by DBS. If we move next, yeah, so these are a few names. India is now over 30 neobanks, and this is all because of the size of population and the different use cases that these neobanks cater to. So if we move on to the next one, so like Thankam spoke about customer experience, the primary reason for neobanks to pop up in India was that we had disgruntled customers who were not happy with the traditional consumer journey, where they had to follow a very bureaucratic process of even opening an account. And this was driven by a very cumbersome paperwork that was actually reducing the enthusiasm of opening an account, which is a very initial step of an individual to start their financial journey. And this might be happening at a point in time where they're actually moving into starting their life journey as well as an adult, maybe going to college, maybe starting a new job, getting a salary account, or starting something new, they're taking up a loan for which they need to. All of these big milestones in a customer's life journey was being disrupted by the cumbersome customer journey that these banks were offering. So, what initially the neobanks were catering to was to actually simplify the user experience of opening an account and enriching the user experience of actually owning and building that trust of. So, like I was speaking about customer centricity, so basically, this was the first driver to open neo banking accounts. And most of the Indian neobanks that came into place was actually to enrich an onboarding experience for the customer, and then actually moving on to building a more personalized experience for the customer. So if we move on to the next, in India are very they're not going out for extremely big retail segments because they cannot compete in those segments considering the traditional banking penetration in India. So what they're actually focusing on are very specific use cases. For example, number one is the MSME and the SME market. So that's where 33% of the neobanks in India are lying, where the likes of Open, the likes of Razorpay, the likes of Paytm are actually banking upon, both from a gateway solution perspective and also from a money management and an account management perspective. Payroll management is all being taken care by these neobanks. The second biggest, I think the biggest population segment that they're going for is the upcoming next generation, which we call it as millennial and Gen Z. And within millennial and Gen Z population as well, that they have broken them down into workers or entrepreneurs or homepreneurs, or in terms of farmer professionals, or in terms of the creator environment, specifically targeting these particular small niche segments. They also focused on teenagers. One of the biggest, I think, disruption in this was to create a teenage neobank with FamPay, where a teenager can have its own debit card customized by their name and face, and then the guarantee of that card is given by their parents. So it's a prepaid wallet that has been created, and it's a physical debit card can be released to the child, so wherever they want to make those transactions can be done. So it's like digitizing the piggy bank or a pocket money for a child. Became one of a very successful venture, and they built a community around that where they were actually teaching children. They were having educational campaigns, they were creating rewards and cashbacks catering to the teenagers, which is more from a food court standpoint or a gaming parlor standpoint, or from buying courses on Udemy or Coursera. So that is something that these neobanks are changing, which never happened previously from a traditional banking environment. And then lastly, it definitely boils down to the unbanked population, to the last mile customer, where Fino Payments Bank, India Post Payments Bank are actually using the business correspondent network of establishing self-service kiosks in tier 3 rural remote areas, where customers can be onboarded using from a kirana store or from a SIM card recharge counter, or their self-service portals as well, and without the intervention of having a banking agent to onboard them. And it is fully from an ATM, it has become a video teller machine, which actually guides you in conducting those conversations. If we move on to the next, from a product standpoint, like Thankam discussed, the deep penetration for these neobanks have primarily been in terms of unique payment options. Every neobank has its own UPI enabled service, a payment wallet, a QR code. It has also moved to unique accounts, where they're actually having a Unicard account, which can enable you to have debit and credit transaction through one card. You can have a multi-currency account. You can have a savings account. You can have a premium savings account, which also enables you for unlocks additional cashbacks and rewards. And all of this is without any service charge. So they are all zero balance accounts. You don't have to entail any minimum balance requirements. And then definitely for SME customers, there's business personal overdraft facilities. There's specific accounts which actually enable you to open there's subscription plans. Who would have thought that SME customers will get start getting subscription plans that if you buy X dollar amount of subscription, you will be able to open 25 salary accounts. If you're able to buy Y dollar of subscription, you'll be able to open 100 salary accounts. So, and that subscription helps you end to end manage your entire payroll, your account reconciliations, your cash flow management, as well as do your vendor management as well. If you move on to the next aspect, partnership, I think this is something which we have learned from the UK environment as well, that how to create a robust open architecture that enables us to do an API integration with other services. You cannot be master of all, so you need to build an ecosystem around your neobank, which is you create a product that helps you attach multiple complementary products of insurance, lending, wealth management that you cannot provide from your particular license, and involve the best in it. So, for example, today Paytm is also able to lend services from the top banking institutions, top NBFCs. They are also able to provide you insurance services from top insurance institutions. They're also integrating bite-size insurance through ACO, Digit, and Toffee, and able to create wealth management solutions through Grow and Zerodha, which can also get integrated in your app. You can also do wealth management through VisorX, that can also be a sub-product within your neobank. Hence, you do not have to create products to service all solutions of borrow, invest, and deposit. You can actually integrate multiple solutions through a robust API ecosystem to create an app that service all these three key issues for a customer. Finally, that's what I've covered, the partnership ecosystem with the open banking. We also saw a tremendous growth through the UPI network. And now we have API gateways and account aggregators in most segments. If we look at the future for India's new banking market, I think it's going to be a game changer when we have a defined framework or regulatory framework of applying digital banking licenses, the ones that we have in UK, Singapore, Hong Kong. We've already started seeing this consolidation of multiple small neobanks. A few days back, Yellow got acquired by Avail Finance. There are multiple other neobanks who are actually consolidating to become one big family and approach a targeted segment. We are also seeing a different type of user personas popping up, such as dairy farmers, street vendors, pharma professionals. The she economy is coming up. The experience economy is coming up. So, for each of these segments, we have dedicated neobanks catering to these segments. So now I will pass the baton again to Thankam to talk a little bit from a convergence standpoint between how the outlook will be between UK and India.
Thank you, Varnika, for your optimism on the future of new banks in India. I'm slightly on the other side of the scale, because looking at the UK experience and also the global experience, we have noted a few challenges for neobanks in the coming days. Because globally there are about 250 plus neobanks there, and all these neobanks are facing the problem of growth versus sustainability. Because in the first part of their journey, and they all wanted to expand their operations as much as they can. But later on, they realized that to survive in the market and also to address the competition in an effective manner, the sustainability issues are equally important. You may be right that maybe a segment-based approach in a large country like India may be a worthwhile option to explore. The lesson we can tell for the UK banks to come to India, or the Indian banks to go to UK in terms of trade, I think some of these understandings will be quite helpful. For instance, the UK neobanks, if they want to expand operations, in India, even now the best option is to link up with the traditional providers, and that's the easier way to enter into the market. So that's what we have learned. But if an Indian entrepreneur wants to start a new bank in the UK, then it would be better to get an e-license first and then go through a formal license to start their operation. So hopefully these sort of anecdotal evidences will help the trade between these two countries. But more importantly, many of these neobanks are actually changing the fee structure these days. And for instance, and also they are introducing the new charge, revising the existing ones, exploring the new revenue streams, because they notice that there is no free lunch, and you need to look into enhance your revenue in one way or other. For instance, Monzo, they have introduced a premium account these days, compared to the no fee account to this account with a £15 per month, and then all others are introducing a low and mid-tier subscription to their business like that. Because there's a quite lot of pressure from the investors to the neobank entrepreneurs to create, they have to develop a path for their sustainability. It is very important. So in terms of market advantage, once they increase the fee structure, their overall charging patterns, how much is it different from the actual service cost from the traditional banks? That difference is really the game changer. So how they can keep that sort of a higher difference between the cost of these two streams is one of the challenges of neobanks in the coming days. And the second is, most of these neobanks, they start to offer more than one services. That's the same trend in India, but slightly on a different note, because as Varnika said, in India, it's more about the customer centered, each customer brand is there, they are focused. But however, there are many more services they can enhance the lifetime value of this product that's there. But the most important crucial bit is, as a new customer, I am approaching a new bank just for my discretionary spending, or whether my salary or my main income, it goes into that bank or a traditional bank. And here is the point which I mentioned earlier about the trust, because banking industry is built and sustained based on trust and relationship. Relationship seems to be a key factor in the banking industry. So whether the people are joining with neobanks, but that joining is mainly for their discretionary spending, or they can allot X amount of money to them and use that for many other purposes as part of better financial planning or something else. I think that is something which we need to look into. And in a recent Accenture audit study, which shows that neobanks are actually losing £9 per customer. I think that's a very big amount in terms of a very big question mark on their sustainability. And the other concern which I want to share is the main income coming from the change fees on the debit card transactions. Because some of the neobanks, they started or clubbed as the small category, small bank category, and then they get bit more lower charges compared to the traditional competitors. So they are taking that advantage quite seriously and made the profit. So my question is whether, or more than a question, my thought is that whether this would be sufficient enough revenue stream for them to continue their operations in their market. So in nutshell, my thought is that they are the challengers, but the challengers won't be there all the time as challengers. Sometimes they can transfer to spectators. But if they want to be challenger all the time, they need to maintain the innovative challenges in terms of the expanding their operations. They want to understand their core operations of the banking sector, and all these are important. I always wonder, I have come across a statement from the former chairman of Monzo Bank. um, I remember that statement because people asked, from a CEO position, he moved to chairman. After 2 years, he quit the bank and moved on. So people asked what happened. Then he said, I lost my interest because initially it was thrilling to get into 1 million, 2 million customers more into the stream. That's a part of my the thrill of the business. But once I reach into the double-digit figures, and then so many regulations, and then I realized that it is not a normal fun game. It is banking. Banking is a highly regulated industry, and you need to fulfill the aspirations of your customers. And I don't want to take that challenge. And that's the reason I resigned from this bank. And I lost my interest 2 years back while I left my CEO position in the bank. So the next 2 years, I simply acted as a chairman. But so I thought that's a very powerful reflection of a serious entrepreneur in this business. So whether these new neobanks entrepreneurs are treating this as a banking business or as something like a game which you can play against each other and make profit at the short point of time, it may not happen. And many of these neobanks were not very profitable until recently in the case of UK, but very recently only 2 or 3 of them actually crossed over the profit margins and broke even very, very recently like that. So overall, I would say the Indian experience is one step or the UK experience is one step ahead of Indian experience. So there are quite a lot of lessons both countries can learn each other and think about the regulatory one. And also, I remember looking into Bank of England's stress test warnings. And some of the stress test warnings against the neobanks are not very positive. And Bank of England is concerned about it. Although they have given green signal and ongoing agreement with these banks, they clearly ask these banks to look into their stress test indicators in the coming years. So overall, I would say it's a mixed picture, but at the same time, it's a very futuristic and very user-friendly. And as you said clearly, in terms of people people who are much younger than all of us, and I think they have very great opportunities with this new innovative banking channel. Thank you. So thank you for the listeners, and this is as I said in the beginning, this is one of our impact seminars, and we will come up with more interesting topics in the coming months. Thank you all. Thank you very much.